Good morning, everyone. My name is Lisa Carlson. I'm the Chief Exec of Canterbury's Business Improvement District, and I'm hosting the session this morning with my colleague Rachel. And we are absolutely delighted to welcome Sadie Furner back to do this session for us on business rates and business support. Sadie is the Business Rates Manager at Canterbury City Council, and she's done this session a few times for us. And of course, business rates are really complicated. They're not set by anyone locally, but processing and managing them happens locally. And of course, Sadie can explain how they're calculated, where the money goes, and she can also touch a bit on grants and business support as well. So before I hand over to Sadie, just a reminder, this is the time of year when we run a number of training sessions. So we've got a few coming up. One is this Friday on climate change, carbon, and building a sustainable everywhere, really designed for those of us who are trying to figure out what to do next and the best first thing to do in the transition to a net zero economy and looking at decarbonisation, biodiversity, all of that. That's on Friday. We've got Google Digital Garage coming back, and they're going to do a session on writing for social media for us. And then we've got Hillary Barn delivering a session on selling the sizzle through social. So Rachel will probably have already put a link in the chat so you can see when those are happening and sign up if you haven't already. And if you're watching this recording later and you've missed something, they'll be recorded and on our website, with the exception of Google. That will be on YouTube, but we'll put the link for that one. And then, of course, we've got the return of in-person networking, which we're really excited about. We can definitely have fun and learn a lot virtually, but it is so nice to see everyone in person. So on the 22nd of February, you're very welcome to join us if you're a bid member at Fitzgerald's, and that's going to take place from 5:30 to 7 in the evening. So that's February 22nd. And then on the 15th of March, we're meeting for lunch at Café du Soleil. So really looking forward to that. And without further ado, I will hand over to Sadie.
Thank you. So that was quite a welcome and quite an introduction. Business rates are complicated, I'm not going to lie. And unfortunately, are only going to get more complicated as we progress into this year, into 2022, 23 and 23, 24 onwards. So my intention today is just to give you a bit of an outline as to what business rates are, how they're calculated, what the different roles are of the different bodies and agencies involved in either calculating or administering business rates, a short piece about what happens to the money that is raised, but when I talk about complicated, I'm going to confess now that I don't fully personally understand the ins and outs of rates retention. So given an hour, that's not something that I'm going to be going into right now. But as Lisa said, I'll also touch on some of the things that have changed in business rates, some of the things that have been introduced for COVID and to help mitigate the impact on business throughout COVID. And also some of the other areas of support that are going to be available as we move forward into the next few years. So first of all, what is business rates? It's a charge on all non-domestic property. So where you have council tax for your domestic, for where you live, business rates is for non-domestic, so it's otherwise known as its formal name of national non-domestic rates. I think it sometimes helps to think of it more as non-domestic rates rather than business rates, because there's a lot of properties that aren't what you would class as traditional businesses that attract non-domestic rates, beach huts being one. You wouldn't necessarily think that something like a beach hut would be rateable, where it is things like telephone masts, advertising rights, lots of different things. So it's not just physical property that you can occupy, so to speak. Business rates itself is calculated. So with council tax, you have a band. So your property is given a band and the amount you pay is based on that band. For business rates, it's given a rateable value. So there's three different ways of calculating the rateable value, and the rateable value is calculated by the Valuation Office Agency. So this is one of the things that we come across. Yeah.
Sadie, should I start sharing the slides?
Yeah, you can do. It's,
Okay.
Yeah.
I wasn't sure if you wanted me to start yet.
No, it's fine. Okay. So, if you just want to click onto the next one, Rachel, halfway down. There you go. So, where was I? So it's set by the Valuation Office Agency. One of the things that we come across most commonly is the blurring of lines as to roles and responsibilities as to who does what in relation to business rates. So the Valuation Office Agency's role, otherwise known as the VOA, is to maintain the business rate rating list. So what they will do is they are the ones that will go out and they will, I say go out in these days, a lot of this is done remotely now, but they will assign a rateable value. So they will look at the, in most cases, market rent that could be looked to be achieved for that particular property. And that's loosely what the rateable value is based on. There are some, there's, as I said, 3 ways of calculating the rateable value or the RV of a property. One is, as I say, looking at the market rent if it's a property that is easily rented. The other is they can look at receipts and costs, so like an income method. That's mostly used for things like hotels and sometimes public houses. And then there's obviously a more complicated, bespoke, if you like, way of rating things such as theme parks and things that aren't necessarily something that you would assign a particular market rent to. So the Valuation Office are responsible for that side of things. What the local authority is responsible for is the billing and the collection of the rates. In order to find out how much rates need to be charged on a property, they would take the rateable value and we will look at the multiplier. So that's something that's nationally set every year by government. We have 2 multipliers, one for small businesses and one for everybody else. The national multiplier at the moment is 51.2 pence and the small multiplier is 49.9 pence, and they are, or they have been at that level for the last 2 years, and they're also going to maintain that level for the next year. So as we go into 2022-23, the multipliers are staying the same. So essentially, to work out what your business rates charge for a year for a property will be, you take the multiplier and multiply it by your rateable value. So roughly around 50%, give or take, depending on which multiplier you fall into. Small businesses will be charged the small business multiplier if the property is occupied and the rateable value is under £51,000. And then anything that is unoccupied or has a rateable value over £51,000 will be calculated using the national multiplier. There are some changes and dependencies on certain reliefs that might be awarded, but I can cover that off a bit later on. So at the moment, the rating lists last for, well, they should last for 5 years. Previously, we've had a list extended by a couple of years, so that was 7. We are now moving towards a 3-yearly revaluation period. So this means that every 3 years, the Valuation Office will reassess the rateable values for the properties in the list. So what this generally means is that they will look at a point in time prior to the new list commencing. So for the current list that we're in, this was the 1st of April 2015. And they will work out what that rateable value would be on that date. There's then a date in the future. So for this case, this list started on the 1st of April 2017, that then comes into effect. We were due to finish this list and we were due a revaluation this year, but in response to COVID, the government felt that it was important to give businesses a bit more certainty over what their outgoings would potentially be So they actually extended it. So we are now seeing this list up until the 31st of March 2023. So that does mean when we get past the 1st of April, we are in a revaluation year. So the VOA will be, if they haven't contacted businesses already, they will be making attempts to contact businesses to gather the necessary information to calculate their business rates going forward. One thing to note about revaluations is that they aren't done to generate additional revenue. They are done to readjust the rates burden. So they're done to look at which sectors might be highly succeeding, which ones may be in more difficulty, and they will readjust the burden based on the market rents for those particular sectors. So you'll find that when we go into a reevaluation, it won't just be the rateable values that change. They generally reset the multipliers as well, so that they try to keep it neutral over the period of the list. As I said, I'm not going to go into depth on rates retention. It's quite a dry subject, but basically it just means that from the 1st of April 2013, an element of the business rates growth that is achieved in an area can be retained by the local authority. So in the main, the rates you pay will go to national government. They will calculate how much each local authority needs to manage the services that it provides, and it will redistribute those funds. With rates retention, where a local authority is potentially proactive in growing their business rate list, in bringing new businesses into the area, then they are able to keep an element of that growth. So the main pot goes back to government for redistribution, but the element of growth, some of the element of the growth will be retained. This changes year on year. There's been numbers of pilots. Mostly it's sitting at around 50%. Canterbury itself was in a pilot a couple of years ago that they retained 100% of their business rate growth. But it can be anywhere between 50, 75, 100%, depending on the particular pilot schemes or particular set of boundaries that are applied to that local authority.
Sorry, my slides were doing something funny, just one moment.
That's okay. Shall I pick up questions as we go rather than?
Well, Sadie, I was just thinking, you just made a really important point about rates retention, and yet it changes, feels like all the time, but you were talking about how it's based on the element of growth. In other words, it's not that 100% or whatever percent of the total business rates is retained by any local authority ever. No. It's a percentage of the growth in that.
Yeah.
And I think that's something that is, because we often think, well, you know, we pay business rates, why don't we get X, Y, and Z? But it's not much of it is retained locally.
No. And I think there's a question in the chat. You just had your property revalued after a 3-year appeal process. Yes, it is likely to change. So every time that there is a revaluation, it will basically start again. So whenever you appeal against your rateable value, you are only appealing against it for the period of the list. So I just wanted to mention some upcoming changes. I thought it was important to mention this at this point. There has been over the last several years a review of business rates taking place, and this is more to potentially try and simplify the system, to look to see if there is anything that could potentially replace it that might be fairer. Or I'm not saying that business rates isn't fair, I'm just saying that the perception, or to basically look at other methods of potentially collecting the money that comes in from business rates. We did have that outcome of the review in the autumn, As I mentioned, revaluations are moving to every 3 years, and that's from the 1st of April 2023. The idea behind that is that the more frequent the revaluations, the more opportunity there is to reassess the rates burden based on economic factors at the time. And as I said, how particular industries might be performing. There's also going to be a new, one thing I should mention, they're not going to entirely scrap it. So one of the options was to entirely scrap business rates altogether, to bring in either a land tax, or to bring in a landlord tax, a sales tax. All sorts of other options were discussed, but they did decide that it was going to go ahead and to exist predominantly in the way it does now. So more frequent revaluations. They're going to introduce a new relief to support investments in property improvements, not from this financial year, but from next financial year. So where businesses are putting money into improving their properties, an element of that will be ignored for the purpose of assessing the rateable value. They're going to put a new exemption and a relief in to support green technologies. So we all know that with the green agenda by the current government, that there is a move forward to more sustainable and greener technology. So businesses that implement strategies and green technologies within their workplaces will have an element of that ignored for the purpose of their rateable value.
Is that retrospective?
No, these are all from 2023-24.
So if you just spent £50,000 on insulating a Tudor house, which is your property, then there's no...
I can't answer, because we don't have guidance, and that's why these are being introduced now. So these, the relief to support in property improvement and the exemption to support green technologies require new legislation. So we don't have any more information other than the information that was contained in the Chancellor's speech at the autumn budget. So at the moment, we don't know how it's going to work. I just thought it pertinent to mention that this is something that's coming up. But as you'll find with most things with business rates, we're usually the last to know. So as soon as we've got more bones to the outline, we can share. But at the moment, that's literally all we know.
Right.
They're also planning additional investment in the VOA. So for anyone that has had to deal with the VOA, they are incredibly under-resourced, incredibly overstretched, are doing everything they can to try and amalgamate what they do in central hubs. So the local element is being lost. But as part of the autumn budget, the Chancellor did announce that there was going to be significant investment in the VOA and what they do. And finally, just a smaller one, but there's going to be a revised billing arrangements for schools. That is coming into effect this year. But again, it's now, what are we, the 8th of February? And we still have very little detail again as to how that's going to operate. So schools will still be charged the same, it's just how we actually deliver their bill to them that's going to be changing. So in addition to the outcome of the fundamental review, as part of the autumn budget, the Chancellor also announced some additional support that will go into this upcoming financial year from the 1st of April 2022. So I've put their new expanded retail discount. Expanded this retail discount in its current form, and again I've got an overview of that coming up, is predominantly staying the same. It will just be the value that is different. So the value is going down to 50%, and it will be for businesses that have a net liability of that's the maximum relief that they can receive is £110,000. So we've had a varied caps and things on different grants and relief schemes lately, but they've just decided to pull another one out on us. So it'll be £110,000. So that anybody that has multiple properties or larger properties, they can receive up to £110,000 in relief total. That's the I'll come on to that. The business rates multipliers, again, as I said earlier, are going to be frozen, so at 49.9p for small business and 51.2p for the multiplier. And they're also going to extend, because we're extending the list another year, we don't have a transitional relief scheme or a supporting small business scheme to go into that next year. So they've actually just decided that they will extend that. It is calculated differently. It's incredibly complicated. But if you are in receipt of supporting small business relief or transitional relief and you don't reach your maximum business rate level, that will continue on into the next year. So, as I said, the main business rates calculation is the multiplier multiplied by the rateable value, and that gives you your gross charge. It's a daily charge, so any changes that happen within the financial year will be adjusted and apportioned from the day the change happens, and you will receive an adjusted bill depending on what happens there. There are a number of reliefs and exemptions that can be applied. I've not listed them all here, but they can be applied based on either the circumstances of the property or the circumstances of the ratepayer themselves. So charities and non-profit making organisations, there is an 80% mandatory relief for registered charities or CASC, so community amateur sports clubs or associations. They will be entitled to 80% relief, providing the property is occupied and being used for charitable purposes. There is a further relief that they can apply for, which is a discretionary relief, and that can be up to 20% to top them up overall to 100% relief. So there very well may be charities and CASPs that don't pay any business rates at all, because they get the 80% mandatory relief and a 20% top up. There's also a discretionary relief for non-profit making organisations. So again, that can be up to 100%, and that's done via application. We will look at accounts, we will look at a variety of different criteria to decide whether or not a business that is non-profit making will be eligible for up to 100% relief. The standard one that most of you are probably aware of is small business rate relief. So that is where a business occupies a premises of under £15,000, so that has a rateable value of less than £15,000, and it's their only business premises. So it's their only rateable business premises that business is responsible for paying the business rates on. There are some exceptions to that. So the relief level is 100% if the rateable value is £12,000 or under, and then it's tapered between £12,000 and £15,000. So the amount of relief may not be 100%, but you may still be eligible for small business rate relief. Businesses that have more than one property, you can only get small business rate relief on one property, and it's usually applied to the main property, providing that that's under £15,000. If you have subsequent properties, the rateable value of those properties must be under £2,900, and the total rateable value of all of your properties must be under £20,000. So there's a couple of things there, but in the main, it's where a business will only have one rateable property and they will receive relief on that property. In addition, if you've got one occupied property, you can have as many unoccupied properties as you like, of any rateable value and still retain your small business rate relief on your occupied property. If you occupy a single property and are receiving small business rate relief, you can continue to receive it for up to 1 year on taking on a second property. So you might have a shop now, you want to take on a second shop. You won't get small business rate relief on that second shop, but you'll be able to keep it on your first shop for up to a year. Some other occupied reliefs. So I've mentioned the discretionary reliefs under the Localism Act. So essentially the local authority has the option to create its own relief. So it can say, well, actually, under this circumstance, we would give this type of property or this type of business a relief. We don't have any such reliefs in Canterbury at the moment. They're usually used if there's something like an event. Flooding is one potentially that it could be used for, natural disasters, that kind of thing. So if there's something that's affecting a particular area, then it can be used to help reduce the business rate burden of the businesses in that area. The one thing I would say on the discretionary reliefs, and the reason that they aren't generally used so much, is because they are fully funded by the local authority. So in most of the reliefs that we have in business rates, they are funded by government. So if we grant them, the local authority doesn't lose out. But the discretionary reliefs are entirely at the discretion of the local authority, and therefore it's ultimately the council taxpayers in that area that foot the burden for those reliefs. Section 47 reliefs. So this is when reliefs are brought in without either time or the ability to change the fundamental business rate legislation. So as I mentioned earlier, with the two reliefs that are being brought in, exemptions that are being brought in from 2023-24, they actually require legislative change in order to bring those into fruition. Things like the expanded retail discount, we had local discretionary relief a few years ago, pub relief that we had a couple of years ago. These are all classed as section 47 reliefs. So they are technically at the discretion of the local authority to award. So we could choose not to award expanded retail discount, for example. But obviously we wouldn't do that because these reliefs are fully funded. So it would be quite unusual for a local authority not to grant a section 47 relief. Hardship relief. So if a business is suffering particular hardship, then they can apply for relief. The policy is on Canterbury City Council's website for granting hardship relief. We generally will look at whether or not the business is not expected to recover. That's the wrong turn of phrase, but we'll look at how much a business rate relief will support that business in order to continue operating. And the other thing is, again, there is an impact on how that business supports the local community. How the number of employees it has, the impact that there would be on the local community were that business to close. So we look at a number of factors before granting hardship relief. There are also a number of exemptions that are available to empty properties. So I just want to touch on empty properties briefly. I did sort of jump around there. But there are a number of exemptions for empty properties. The main two are the 3-month and the 6-month exemption for empty properties. So all properties at the point that they become empty will be eligible for at least a 3-month empty property, an exemption from empty property rates. That exemption is based on the property not the ratepayer. So it starts at the point that the property becomes unoccupied, and goes for either 3 months for the vast majority of properties, or 6 months if it's an industrial property. If there is a change in ratepayer in that time, the exemption doesn't start again. The exemption period doesn't begin again. It's 3 months from the point it becomes unoccupied, or as I said, 6 months. There are a number of other exemptions that don't have a fixed time limit on them. So things like if a property is listed, then there won't be any empty property rates charged on it. I think there's some really obscure ones, but there's things like ancient monuments, charities. Again, if the property is vacant, the ratepayer is a charity, and it's next going to be used for charitable purposes, then that property will remain exempt. So I think the main thing to take away from that is it's in the vast majority of cases, the empty property exemption is 3 months from the point that the property becomes empty. So, as we said, COVID-19 has brought several changes to business rates. The main one is expanded retail discount. So in 2019, the government brought in a retail discount to support the high streets, and that was a third off the bills. What we did, or what happened at the start of the pandemic, is they amended that discount. So for 2020, 2021, the discount was moved to 100% for the entire financial year. And as in the title, it was expanded to include those businesses not only in the retail sector, but also in the hospitality and leisure sector as well. So for 2020, 2021, the rates bill was 0 for those properties. They also brought in a nursery discount. So the nursery discount was to support childcare providers in the early years setting that were Ofsted registered. So again, it was 100% for that first year, 2020, 2021. CARF. Now, this is, I've got a slide on this again a bit later, so I'm not really going to go into it in much detail now. But this is something that we are currently actively working on creating a discretionary scheme for. So, as I said, I'll go into more detail in a minute. And then also we had the number of business grants that were administered by the local authorities. So back in April 2020, we had the Small Business Grant Fund and the Retail, Hospitality and Leisure Grant Fund. So the Small Business Grant Fund was a grant of £10,000 to businesses in receipt of small business rate relief. And the Retail, Hospitality and Leisure Grant was a grant of either £10,000 for properties with a rateable value of under £51,000 or £25,000 for properties in the retail, hospitality and leisure industry with a rateable value over £51,000. There was also a discretionary fund provided to local authorities to support businesses that didn't fall into either of those schemes, or for businesses that weren't registered for business rates. So, for example, some bed and breakfasts wouldn't be rated for business rates. They remain in the council tax list, so they were eligible for funding from the discretionary fund. We then moved into what I can only describe as challenging period of the local restriction support grants. These came in technically in August 2020, but for our area only really sort of came into effect from the beginning of the second lockdown on the 5th of November 2020. And they were a series of grants provided to businesses to support them, mainly in the retail, hospitality and leisure sectors, to support them through the second lockdown, and ultimately the third lockdown as well. The closed business lockdown payment, again, a one-off payment, sometimes referred to as the Rishi bonus. It was a one-off payment to businesses, again, in the retail, hospitality and leisure sector to get them through the Christmas period in 2020. Support for wet-led pubs, again, another one-off grant for public houses to get them through the Christmas 2020 period where that they weren't able to trade or had been severely impacted by tiered restrictions in place at the time. We were also given the additional restrictions grants, which are still in existence now. That was, again, another discretionary grant fund that councils could use to support businesses that didn't fall under the mandatory categories of the earlier grants. We then went into restart grants. So as the roadmap to reopening the country started in April 2021, we then went into the period of restart grants. Again, a one-off grant to businesses in the retail, hospitality and leisure sectors, together with sports and gyms and personal care. So businesses in those areas. And finally, where we are now, and we are administering the Omicron hospitality and leisure grants. So these grants exclude retail, they exclude personal care, and they exclude sport and gyms, and they are for businesses in the hospitality, leisure and accommodation sectors. Again, they are one-off grants, and I think I've got a little bit more information on forthcoming slides. So just a little bit more of an overview of expanded retail discount, as that's something that we're still administering now. So as I said, it was the original retail discount was introduced in 2019-20, and it was a third off of the business's net bill after all other reliefs for an occupied retail premise with a rateable value of less than £51,000. And that was just, as I said, to retail properties. That was subject to state aid allowances. Again, they've changed now that we've left the EU, and that's now referred to as subsidy allowance, just in case that there's something that we mentioned there. So it was expanded in 2020-21 to become 100% of the whole bill for occupied business premises operating wholly or mainly in-person services in the retail, hospitality and leisure sectors. There was no rateable value cap on this, so anybody in those sectors were eligible to receive it, could receive it, and there was no implication on subsidy. So this was one relief that was given that wasn't included in subsidy allowance calculations. For 2021-22, the relief became 100% of the whole bill from the 1st of April to the 30th of June 2021. And then that discount was reduced to 66% from the 1st of July 2021 to the 31st of March 2022. So overall, roughly about a 75% reduction across the whole year. There was a cap introduced of £105,000 of relief per business, not per property. So if you were a business owner with multiple retail properties, you would not be eligible to receive more than £105,000 of relief between the 1st of July and the 31st of March. The 100% period at the beginning didn't count towards that cap. That was, everybody was eligible for that. And as I said, subsidy allowance implications came into effect from the 1st of July 2021. So if you receive that relief, there is an element of subsidy, then that would be included in your allowance. For 2022-23, so for the year that we're just about to bill, it will be 50% of the bill for the whole financial year. There's no rateable value cap, but there is a maximum relief threshold of £110,000 per business. So again, to say that's per business and not per property. So if a business has multiple properties, it will be down to us and to the business to tell us if they're going to exceed that cap and that therefore they're not eligible for relief. We do have an opt-out form on our website. So it's currently to opt out for 2021-22. but that will be amended so that businesses can opt out of the relief for 2022-23. But essentially, there won't be a split billing period or anything like that like we've had this year. It will just be a complete 50% off the bill for the whole financial year. I say that's unless, of course, anything changes and the government decide to amend that in any way. But that's what we're billing on at the moment, and that's what we will produce the forthcoming bills on. So I said I'd come back to CARF, so that's either the COVID-19 or the Coronavirus Additional Relief Fund. So at the start of the pandemic, businesses that weren't eligible for the retail or the nursery support were inclined to contact the Valuation Office Agency and appeal their rateable value on the basis that COVID had significantly impacted them, and it had impacted the rent that they were able to achieve for their properties. So the main people that were doing this were, for example, there were lots of office blocks in the City of London who said, well, actually, now everyone's working from home, the value of our office space has significantly reduced. So what they did is they went to the Valuation Office Agency and they appealed their rateable value and said that there had been a material change in the circumstances, and therefore their property wasn't worth the level that the business rates were set at. What the government did is they have now legislated to withdraw the opportunity for businesses to appeal their rateable value based on COVID. So it's basically removed COVID-19 as a material change in circumstance, and therefore the Valuation Office Agency will not revalue property based on a reduction in rent that they can achieve for their properties. So what they did is they announced a relief fund to support businesses that haven't already received support via either the expanded retail discount scheme or the nursery discount scheme. It's for the 2021-22 financial year only. It is almost entirely discretionary relief. So Canterbury have been allocated a fixed amount of funding to support the businesses in the district, and they therefore have to come up with a scheme to distribute those funds. It is a relief directly off the business rates account, so it's not a payment, it's not a grant, and businesses will only actually receive any monies back if they go into credit on receipt of this relief on their business rates account. As I said, it's up to the council pretty much to decide which businesses will be eligible for support from this fund. The government gave us 3 criteria, and everything else it is down to the council. So businesses can't be in receipt or would otherwise have been in receipt or entitled to expanded retail discount. So it basically will exclude all businesses in the retail, hospitality or leisure sectors, regardless of whether they have actually wanted, applied for, or are in receipt of expanded retail discount. We also have to exclude nursery discount, and then there is also a discount or relief that's been in place for airports. Obviously, we don't have any in our area, but if anyone was in receipt of that, they wouldn't be eligible for a payment from the CAR fund. As I said, we can only apply it to the business rate bills for 2021-22. The property must be occupied. Excuse me. The property must be occupied. If it's unoccupied, it can be temporarily vacant due to COVID-19, but it for all intents and purposes needs to be occupied. And the third criteria is that business must have been adversely impacted by COVID-19 and not have been able to adequately adapt. I'm sure you can appreciate that's quite broad, and it opens a lot up to interpretation. So we are at the moment in the process of devising a scheme that takes those three criteria into account, but also the local needs of businesses in Canterbury that don't fall into the previously eligible categories for retail or hospitality, leisure or nurseries. As I said, I think I mentioned Canterbury's funding is just over £3 million, but there are a hell of a lot of businesses in the area that would fall into potential eligibility. So as I say, we're just trying to work out the fairest scheme at the moment for distributing those funds. So just to mention the other grant scheme that we have at the moment in a bit more detail. So we've got the Omicron Hospitality and Leisure Grants. So introduced to help mitigate the impact of the Omicron variant on businesses in the hospitality and leisure sector. The property must be used for in-person services and its primary use is for social mixing. So like the other grant schemes, we are unable to support businesses that are in the event sector, for example, or that provide services for people to enjoy away from the property in question. So it's just to say that, so that takeaways, for example, although potentially fall into the hospitality sector, they're excluded from this scheme because they're not an in-person service. Somebody doesn't sit down and eat their food on the premises. As I mentioned, this excludes retail, it excludes sports, gyms and personal care. So any properties that use is primarily in those sectors will be ineligible for this grant. Where a property is of mixed use, and it's not on these slides, but where it's of mixed use, so it has more than one use, the primary, in order to qualify for a grant, the primary use must be more than 50%, must be an eligible business, and that eligible business must account for more than 50% of the income to that business. So one of the challenging ones that we have at the moment is where you have certain sports clubs that might have sports facilities for the purpose of exercise, which would be ineligible, but it may have a clubhouse or a bar or an area that's rented out that would be eligible. In order to receive a grant, that eligible part, so the bar, the function room, whatever it is that they have, must bring in more than 50% of the income to that business in order to qualify for one of these grants. The scheme was originally due to close on the 28th of February, so our application form was coming down on the 14th of February, but the government has acknowledged that the tight timescales to provide the grants for a lot of local authorities was just too much. So they have now extended the scheme. So applications will now close on the 18th of March, and all decisions and final payments need to be made by us by the 31st of March. There are subsidy allowance implications. So there's 3 thresholds at the moment based on the amount of subsidy a business has already received, and also the impact of COVID-19 on the business, depending on which category of or which threshold of subsidy allowance a business falls into is to be whether or not we can or cannot make a grant. If a business has received more than £335,000 in subsidy, so that's not just previous grants, but that might be expanded.
Sadie, your mic's gone off. We can't hear you. You've suddenly gone silent.
Oh,
there we go.
okay.
Okay. Sorry, could you recap that, maybe the last 30 seconds of what you were saying?
Yeah, of course.
Thank
Sorry. So I don't know if you got to the bit where I said this, where the scheme closes. So the scheme will close on the 18th of March.
Yes. Yeah.
And final payment's 31st of March. So subsidy allowance, there are 3 thresholds, 3 levels of subsidy that a business can receive before they're ineligible to receive any further subsidy. The main one is £335,000. That is total subsidy. So that's not just grants, so that could be expanded retail discount, for example. It's over a rolling 3-year period, so it might also include some state aid that was received prior to Brexit. It's quite complicated. Most businesses that are going to be applying for these grants won't have received potentially anywhere near £335,000. If they have, the application form asks them to declare that they have received it, and we will be in contact with them to establish exactly how much subsidy they've received and whether or not they fall into either of the two categories, which are a much higher threshold. Ultimately, businesses could receive in the realms of £12 million in subsidy before they're excluded from receiving any more, but there's quite a lot of complicated criteria in and around the assessment of eligibility for that. So the award of the grants is based on the rateable value of the property. So if an eligible property has a rateable value up to and including £15,000, then they'll receive £2,667. 15,001 to under 51,000 is £4,000, and £51,000 and above is £6,000. So providing there's no subsidy allowance implications, a business of any rateable value that's eligible would receive £6,000 as a maximum. So just to sort of finish off on the actual business rates again itself. So business rates is billed on either a 10 or 12 monthly instalment cycle. The default, the statutory instalment scheme is 10, but businesses can request 12 monthly payments. So the payments either go from April to January or April to March each year, depending on whether you're 10 or 12 monthly. If you're billed within the year, then you will be given a first payment of the next available whole month. So, and then that your payments will be extended through to February. Obviously, if you're billed for the first time for a financial year in late February or March, then you'll only be given one instalment, and that's usually 14 days after the bill is issued. There are numerous ways you can pay your business rates. So you can pay it online, you can pay it over the telephone, backs, or for most businesses, the most convenient way is by either 10 or 12 monthly direct debit. Just to point out that if you are not on a direct debit payment group and you pay via one of the alternative methods, your payment must be received by the date on your bill to avoid recovery action. So you'll be given instalment dates on your bill, and that instalment date is the date by which we should have received your payment. It's not the date that you should make your payment. Just to point that out. Bills are available electronically, so you can receive your bill by email. I've put the website there to sign up. There is a government drive. Now, we did have, as part of the fundamental review, one of the suggestions was to move to a single point electronic delivery method for bills. We don't have any further information at the moment. We don't have any further details. So we are working to sign up as many businesses as we can electronically to receive their bill by email now. And then as things progress, we will then move them onto whichever digital platform the government decides that we're going to use. There's still obviously opportunity for that to change as well. With each bill, we have to issue a set of explanatory notes. Several years ago now, they removed the requirement for us to send those explanatory notes by paper. So now they are available on our website. We do have paper copies available on request, but obviously, ultimately, we have the link on the reverse of your bill to those explanatory notes. They just give you an overview as to how your bill's calculated, the different types of reliefs and exemptions, and just a general overview, a bit like we're doing now. The unpopular bit, so business rates recovery. Our recovery process is set down in law, it is set down in our legislation. We have to issue a bill, or otherwise referred to as a demand notice. If an instalment is late, we do allow a 7-day grace period. So whilst I said your payment needs to be received by the date, that is your instalment date, we would issue a reminder notice. The reminder notice gives you 7 days to make that payment up, so to pay that missed payment. If you don't make that missed payment, on the next time you miss an instalment, you will actually be issued a summons. So we don't have to issue a final notice, which is why I've put if applicable. So if you don't pay an instalment on your bill, you then don't pay it on your reminder, you will then be issued with a summons. And a summons at the moment incurs additional costs of up to £110. Basically summons you to attend the magistrate's court. Magistrate's court, we will apply for a liability order. There are only a very limited number of reasons that a magistrate wouldn't grant a liability order. There's a very limited number of legal defences against the issue of a liability order. The most common reasons that we have for people advising that they've unpaid their or not paid their business rates is either that they can't afford it, or that they have an ongoing dispute with the rateable against the rateable value with the valuation office agency. Unfortunately, neither of those are valid defences. If you have appealed your rateable value, you do actually, and you are required to continue paying your business rates in line with your bill all the time that the rateable value or your property is in the rating list. So if you've appealed the rateable value because you think it's too high, unfortunately, you need to carry on paying the bill as it's issued until such time as the valuation office agency revise the rateable value. If they obviously revise it down in your favour and you've overpaid, we will of course refund that money to you. If you pay your missed instalment on the reminder notice, the next time you miss an instalment, you will be issued with a final notice. That final notice is a requirement for you to pay the full outstanding charge that's remaining for the financial year within 7 days. So unlike council tax, where you're given 2 chances, you're given 2 reminder notices before a final notice or a summons is issued. For business rates, it is just 1 reminder. Failure to pay on that first reminder will go to summons. If you pay on the first reminder and you miss a further instalment, then you will be issued with a final notice. If you don't pay the full amount or come to an arrangement with us on that final notice, then a summons will be issued. The liability order is granted at the magistrate's court, just to say that it is something that's done at the magistrate's court, and therefore it doesn't show up on credit ratings, on Experian checks, anything like that. It's just an order that enables the council to protect its interest in the debt and then take further recovery action if necessary. At any stage in that process, we can make an arrangement with a business. So providing that they contact us, we can look to make an arrangement at any stage. So if it's at reminder stage, we can look to either recalculate instalments. If somebody's on 10 monthly instalments, for example, we can move them on to 12 to reduce the instalment amounts that need to be paid. If at final notice, we can potentially put some further monthly instalments in place. Again, at summons we issue with what's called an auto spar, so it's an automatic arrangement. So we do actually give businesses an arrangement at the summons stage to pay, so another opportunity to pay the bill without any further enforcement action taking place. If we go through the recovery process, we obtain a liability order, we've had no contact from the business, then we may pass that debt on to enforcement agents to collect. So at the moment in our area, we use Dukes, and they will go out, follow all of their, which is now abundant, legal proceedings to recover that debt. We also, on a liability order, have the option to take insolvency action. So either make an individual bankrupt if it's an individual ratepayer, or we could seek to wind a company up. I've put committal on there. Now, it's not something that we actively pursue, but it's something that we could do for individual ratepayers only, and we could seek to commitment to prison. I think the last bullet point is the most important, is that we do have a highly skilled team that do want to help. So at any point in the recovery process, we can only help if a business contacts us. So it's really, really important that if you find yourselves in any stage of that recovery process, that you engage with us, because it's only if businesses engage that we have the opportunity to assist, either with arrangements or potentially signposting to other assistance that might be available in the form of either relief or other reductions. That really has been a fly through, and I'm actually amazed that I managed to talk for an hour, but there's just some useful information, useful websites there. So the Canterbury Business Rates website, Valuation Office Agency, some general information on business rates from gov.uk, and obviously our email address should you need to contact us about any business rates matters in the future.
Great, thank you so much, Sadie. Wow, that was a lot. What I will do is I'll make sure that we share all the slides, and we've got a recording, obviously, of this, so that we can share that with everybody and those that weren't able to make it today. But thank you. Shall I just open up? I'm aware that we are running over time, but if anyone has any questions for Sadie that you'd like to make now, please do feel free. Otherwise, if you need to leave, that's no problem.
Actually, I've got one quick question, Rachel and Sadie. We have an issue which Rachel will be fully aware of, where we pay rates on the property here, but also rates on our car parking.
Yeah.
And up to now, and I've spoken to the valuation office and your local offices, and they've actually said don't pay at the moment on the parking because it's clearly wrong. Because they charge us for 9 spaces and we only have 7. Now, should we be paying that then? Is that what you're saying?
Unless you've come to an agreement with us. So I think you've said that we're fully aware of the ongoing situation.
Yeah.
Unless we've instructed you not to pay, then yes, technically, because you'll still fall into the recovery.
Yeah, not until it was corrected, because it's just clearly a mistake, I think, based on historic data, I think. But I mean, I'm just wondering whether we should just pay it and get it sorted out later, maybe. I don't know.
I think on the basis that if there's an appeal outstanding and it's being looked at, making the payment will just mean that when they revise the rateable value, we'd refund anything that's been overpaid. I think the danger that we sometimes find when people don't pay when there's an appeal outstanding is that when the appeal is concluded, there's the risk that either the full amount is still due, so i.e. the appeal is dismissed and that business then hasn't paid anything, and they've got a very short space of time potentially to then pay what is due, or it's only adjusted slightly and the bulk of the charge is still due. So generally our advice is we won't hold recovery action, and our advice is to make payment unless of course we've come to an agreement with the individual ratepayer to say, well, we'll hold action for this amount of time.
Yeah, though it's actually a very small amount of money, but I was just thinking, well, we probably ought to get it right, but maybe we'll just pay it and then pay back later on. Yeah. Okay. Thanks.
Sounds sensible. Thank you, Simon. Anybody else?
Yeah, I've got a quick question. So I often get phone calls saying your rateable value is incorrect. Let us help you sort it out. Blah blah blah. So my kind of thoughts are, how do I know that it's correct? and what would you kind of suggest in terms of kind of looking at that rateable value that it currently is set at to know whether that's what it should be?
So first of all, what I would suggest, just excuse me a second, what I would suggest is looking at the calculation of your rateable value on the Valuation Office website.
Yeah.
So that will break down how it's been calculated. It will give you your square footage, and it will give you the value that they've applied per square foot, if you like. It's then potentially worth looking at other businesses in your vicinity.
Yeah.
Maybe properties of a similar size or a similar nature of use, to see what their rateable value is. Ultimately, challenging your rateable value is something that you can do yourself as a business for free.
Yeah.
It doesn't cost anything. So rating agents, we love them, are inclined to have a look and go, oh, we might make a quick buck on that one. Sometimes charging exorbitant amounts of commission.
Yeah.
But there's nothing wrong with putting a check in with the Valuation Office agency. So they've got a 3-stage process, I say, at the moment, because apparently it's going to change at some point.
Yeah.
But the initial one is a check. So you would go to them and say, well, actually, for example, if your rent for your property is considerably less than your rateable value, then you might want to put in a check.
Right.
You've looked at similar properties in your vicinity that are used in a similar way and a similar size. Again, you might want to put in a check. They'll look at your check. They'll look at the information. You don't supply a stack load of information at that stage, but they'll look at your reasons for requesting a review, and they'll either say, oh yeah, you've got a point, we might have got that wrong, or they'll say, actually no, we're really confident and happy.
Yeah.
At that point, they'll say to you, you then have the option to challenge. Challenge is where you then have to put in an awful lot of information to go down that route.
Yeah.
Look at it again. Yeah. So all of those similar businesses, you'll have to provide all of their information if you can get hold of it in the public domain and things like that. But rating agents will usually target a particular area if they think that area has been overvalued, but it doesn't necessarily.
Yeah.
It has.
Yeah, no, because I often get, oh, your rateable value is quite a lot higher than other businesses around you, and I was like, yeah, the area is really quite varied. So some of the shops are tiny and some of them are bigger, and you don't know what the street that I'm on is like. So you know.
Yeah. Well, all of the information, and it should be about how the rateable values are calculated, in about 90% of cases are available for public viewing on the Valuation Agency website. So you could look at, so for example, even if you haven't got a shop that's or something that's a similar size to you, you could look at, well, how much per square foot are they attributing to their retail area, for example.
Sure.
And if I compare that with my retail area, is that similar or
Can I interject slightly on here, because we had a bit of experience in this, in that if you've got communal areas, sometimes the Valuation Office do include some of those, and you might find that if you've got those areas which are the landlord's responsibility, you're actually paying business rates where maybe you shouldn't be. But that might be worth looking at, because we actually got a rebate on the basis of that ourselves slightly.
Okay.
Yeah, and I'll interject there as well. We had our rates increase from 27,000 to, I think it was 81 or 71, something like that. I mean, like, just absolutely phenomenal. And I used one of these rate valuation companies who saw that we'd been paying business rates on a function hall that we didn't have, and we'd been wrongly assessed as having a restaurant which we didn't have, So, I mean, luckily, although it took 3 years of tons of paperwork, eventually we actually had our rates reduced to £35,000, which is acceptable. But the problem there was, by that time we weren't able to get the grant, because we were being shown as being over the 51,000 business rate. So we lost a lot of money because of that. So it is, if you think you've got a case, definitely, go for it. It doesn't cost anything, to use one of these companies, but until they win, of course. And then, but for us, it was so worth it,
Okay.
Yeah.
Just to say as well, it's actually probably more important in that respect to make sure that when the VO contacts you for the details of your property for the revaluation, that you actually submit and return the form.
Yeah.
I'm not going to say that that'll eliminate any mistakes, because they do happen, as we know. But hence the massive investment. But what I would say is if you've returned that and you've put as accurate information as possible in it, then there's hopefully less chance of there being any mistakes as a result of the revaluation.
Could I ask one quick question? You were talking about the CARF fund.
Yep.
And I'm sorry if I'm going to sound a bit stupid here, but there's the ARG fund as well, isn't there? Those are two separate things.
ARG is grants.
Yeah.
CARF is business rate relief.
Right. So they're coming from
Completely
two separate directions.
Yeah.
Got it.
So ARG are just local grants.
Just
discretionary payment, one-off payments to people, whereas the CAR fund is a business rate relief, so it's a reduction in the amount of business rates paid. Right. Okay. And the details for that, obviously we've got the slide on it, but I think we need to share that a little bit more through the bid, because that sounds like, if there's 3 million pot, that's really good to know. We don't have a scheme yet. Yeah. So that's being devised now, because it is a complete, other than the exclusions, I said that it's complete local discount. So the scheme is drafted. I'm not going to go into detail because it's not been approved by members yet, but yeah. Okay, well, as soon as we have more details on that, then we'll get that circulated through our comms. That's great. Would anyone else like to add anything to the conversation? No? Okay. All right. In that case, thank you so much, Sadie. We will get a recording of this shared with everyone and the slides. Thank you for your time this morning, and hopefully we'll see you either on another training or at a networking session very soon. Okay. Thank you.
Thanks for organising this, Rachel.
No problem. Thank you, Sandy. Bye-bye.